All right, Real Migos, we are here. Sorry, I did the short counter today. I didn't feel like sitting here for 3 minutes listening to the song. Ian, welcome back, my friend. Good to see you.
Oh my gosh, good to see you too. I know we just saw each other. What was it, last week?
Yeah,
And we gave each other the flu.
yeah,
That
man.
was fun. But man, it's good. It's good to finally be back doing a video.
I
Chatting
know.
about
Yeah, I
Austin.
had to shoot a video yesterday, and my editor then told me, "Hey, by the way, I can't edit for you this week." And I'm like, "Great." Having the flu, trying to edit yesterday wasn't the best, but we got it done. So, all right, man. We've had a couple wild weeks here. We've been gone. You and I was on vacation. I was out of town. You did some vacation stuff, and then we were at One Reel last week for a real broker. That was a lot of fun. Obviously, we both got an STD from there. It looks like
It's airborne pathogen, man.
Oh, airborne pathogen. Yeah, sorry. So I apologize to everybody for doing a live stream on a Saturday. Unfortunately, Wednesday was not going to happen. So welcome, man. Streambots.
Oh.
Who's Streambots? Kevin, what's
I'll
up,
tell
man?
you what. I'd rather be here than in Vegas.
Oh yeah, how was Vegas? You went to like a thing, right?
Well, the plan was to go to this big concert. Guess what? Canceled.
They canceled the concert?
There were like 83,000 people there, and it was canceled the morning of because of a wind advisory. So they ended up pulling a Ja Rule with the Fire Festival. That's what happened, man.
Oh man.
And so there were people that like flew from Australia and stuff to go to this thing. So they're spending tens of thousands of dollars to get here, and they're like, cancel.
That's a bummer.
Yeah, well, that's fine. They'll provide refunds, at least for that, not for the travel or hotel.
Yeah, that's a bummer. Well,
it is.
In the time that we were gone, some interesting stuff came out in the market, and it sucks because like I like to do those like reels for Instagram and stuff and put stuff out. But we were doing, I was in the Bahamas for a week, which was amazing. Finally took a vacation for the first time in a while. Then at One Reel. So I was looking at all this news, not creating content around it. So so the housing market numbers came out. We're going to talk about that. There's some interesting thing. Most agents don't look at the housing market like underlying data. I did. We're going to look at it today. We're also going to look at kind of the pricing, what's happening with pricing, what we've both kind of seen in the market over the last couple of weeks. Obviously, we were both gone, but we still had properties closed in that time. And then I want to go through and get your take on some of the news that's happening in Austin. I mean, there's quite a few things. And then we have an election next week, right? Is it next week?
Yeah. No, people are already early voting right now.
Yeah.
November 4th and 8th.
Yeah, I'm curious to see what happens in our local races here to see what happens. Obviously, I think we have some city council seats up, and then we have the mayor seat up. What's his face will no longer be mayor anymore. It's between Jennifer Verdon. What's the other guy?
Who was on our channel, by the way.
Yes, who's on our channel. Celia. I don't know her last name, Celia. And then Kirk Watson. So I think, if I'm not mistaken, Kirk Watson was mayor at one time, if I remember correctly. So anyway, just curious to see what happens with those races. Obviously, we've had Jennifer on this channel, but we're not endorsing anybody on this unless you want to go for it. But
no. I mean, it's just cool to know that we have somebody who is effectively trying to change things that was on the channel and has a real estate background. That's it. That's the excitement for me. But before we go into any of that, do you want to talk about like One Reel and like what your takeaway from that was in real estate in general? Did you have one?
Oh man, so One Reel, yeah. Well, real quick, One Reel was a real estate event for our brokerage, which is Real Broker. We're a fairly new brokerage on the scene, but we're growing like nobody's business. What was interesting is there's a lot of good speakers that were talking about the market and talking about what they were seeing. So there was good stuff there. I mean, as far as just takeaways to the market, I don't think I took away anything. I mean, maybe you did. The one thing I really did love is our CEO said, you don't need to be when you're a lion in the room, you don't need to be loud about it because everybody knows you're a lion, and that real broker, we are that lion. So that was kind of a rallying call for our brokerage. It was a pretty cool moment. But what were your takeaways?
No, that was really cool. It was definitely a one of those plugs that we gotta. If you're interested in investing in a company, Real Broker is one of those companies that I think you should keep an eye out on. But that's not what this was about. So one of the things that I noticed is that generally you'd have a lot of the United States that followed sort of trends, especially over the past few years, and Austin would be a little different, right? And in this scenario, I think as they were talking at the conference, everything that people were saying, I was like, oh yeah, that's what Austin's doing. Oh yeah, that's what Austin's doing. So now we're almost all riding a similar wave together nationally, where Austin was almost always an outlier up until this point.
Well, and then obviously Austin too, if we look at what's happening with prices recently, we were ahead of the curve a little bit there. They were talking about Phoenix and Austin quite heavily. Most people were. So it's interesting. I have let's see, where is it? I mean, here's what the MSA has been doing recently, right? So we started this year, right at 476 in January as our closed, all the way up to 550 in the MSA. And then now we're back down to really prior to the beginning of this year's numbers. Right?
Yeah, I love this. I love this graph because it shows that people still have plenty of equity. You can very easily see that you still have plenty of equity, but prices are continuing to decline. Now, obviously, the question is how far from there will they continue to decline?
Yeah. Well, it's interesting as you can see, like this graph right here. Now, this is the Austin numbers. We got up to 667. And so what's interesting with Austin being a high of 667, if we look at last year, we are kind of similar to last year, but we had this big weird drop right here. I think these numbers were skewed. I think that this should have been probably around 640, and this line should have done a little bit more like this, but whatever, it wasn't. What's interesting about this, though, is if you look at these, and I'm sure if you looked, these dips that you're seeing are probably coordinate when they announce like large hikes in the Fed rate, right?
100%. That's exactly what I was thinking.
Here's June. I think
June was the big one from what I remember. That was the one where everybody was like, okay.
Yeah. On. Well, and then if we look at interest rates right now, I like to look at mortgage daily rate, and it spiked up a little bit. It got up into the mid sevens, and now it's down like to 7.04. So I'm curious to see what happens. I don't know if you've been paying attention to some of the articles that are coming out, but there's articles now saying that interest rates are going to go back down to 5.4% next year.
Just pause for a second. You were like, it's down to 7.04. Think about that 2 years ago. If someone would have told you that the interest rates were going to be here, I don't know. I think a lot of buyers would have jumped a little quicker.
If you think about it too, we had Trey on not too long ago when we were kind of like taking bets a little bit on where we would be at the end of the year as far as interest rates. I think I said, if I remember correctly, I said 6% is where we would be towards the end of the year. We're still 1% higher than that. I forget where you guys said we'd be.
I think I said I was like 5.4 or 5.5, something like that. Yeah. I split the difference.
Yeah. So I'm curious to see what happens. What's interesting, if you're looking at the pricing though, here's what's pretty interesting. If we're looking at pricing right now, it's come down to 550. If you look, 555. So we're barely squeaking over the beginning of the year, which if we're looking at, going into the end of last year, we're barely over that, right? So we're about 5% up. A lot of people are talking about how, it's so expensive. Homes got too expensive. Well, they have, but now they're leveled back below last year's numbers. So, is it really that expensive? What is so expensive? Well, number one, what's expensive is property taxes. I mean, we both sat here and saw the property tax evaluations come out this year. They were stupid high. The tax district said, let's go ahead and just raise taxes as much as we can. And then, so that has also made it really unaffordable. Now you have the taxing districts and the city councils trying to figure out how to spend all this extra money, which is great. instead of like trying to reduce taxes and make it affordable. And then they want to take 350 million and pass bonds to make, to put it towards affordability. But that just adds more taxes to homes, which makes it actually more unaffordable. Anyway, I keep going off of this tangent, but
that's one of the voting opportunities right there, is the affordable housing bonds. So I think that's a really popular one this year. So whichever way you feel about it, that's something that you should look into, research, look at other cities that have passed similar things, and then compare that and say, do I want that here in Austin? We do want affordable housing. That's undeniable. The question is, would backing a bond like this answer that rallying cry? And is the bond just that, or are they sneaking other things in there?
Yeah, I mean, look, here's the deal. Like, regardless, I think most people don't understand. I mean, let's look at our presidential administration, right? They passed a bond or a bill that was called the Affordable Care Act or whatever it was recently.
I don't think
there's nothing in that actually made, or what was it called? The Inflation Reduction Act was. But there's nothing in there that really actually helped reduce inflation. And, the people that said it will are saying that, well, it's going to be longer term. It's not short term. So it's interesting that we keep passing spending bills that end up spending more money, and then it makes things unaffordable. And then we don't understand why things are unaffordable. We don't understand why inflation is so high. And then you have the Fed, which has just done a bang up job of crashing the housing market, or attempting to crash the housing market.
I think there are a bunch of comments in there that should be shared. And this is actually, it's a really interesting conversation, because I like what Dinosaur D said. He said, people won't do their due diligence before voting. Let's be honest.
Yeah. And that's what I was trying to get to. I mean, what I was trying to get to the point of, everybody hears these buzzwords as of affordability or inflation reduction. So that's what's going to do it. That's going to fix it. More spending. And does more spending actually help it? I mean, I think if we're looking at inflation right now, what's helping inflation or helping reduce inflation? I think a few things would help. Is maybe if we start producing more oil, that might help, get prices down here, and which would end up getting prices down on a lot of those subsidiary things like food and all those other things. And I could be completely wrong. I mean, sure you can tell me in the chat, but what do you think?
And Dinosaur D's most recent comment.
Yeah.
And what's worse is who's this? No, let's not say that. But what's worse is they think it's all free. So I think that's a really important point whenever you're voting for anything. And not everyone checks into this, but the money has to come from somewhere, no matter what it is that you're voting on. So please take that into consideration whenever you're voting. And there are some people that say, you know what, that's great. Take 10% of my salary and give it to the homeless, right? Like they might say that, but I think I'm more in the camp of, I believe that you should be giving. There are things that you should be giving, but a lot of these programs out there, they'll give 1% and keep 99%. And that is not an exaggeration.
Right.
And so just be really careful when and research that kind of stuff when you're looking into it.
Yeah. I mean, to your point, if you look at most nonprofits only use maybe generously 5% of their intake on the actual thing that they're doing. Right. A lot of it goes to administration costs and fees and things like that. So, that's
why I was talking about mobile loaves and fishes on here. You've brought them up a few times, and I started looking more into them, and they're really good.
Yeah. Are they?
Yeah. They're doing 127 acres of housing they're adding right now. Like, that's incredible.
Yeah. And, what's interesting is a lot of that land they're building on is land that could have gone towards development, though, right? Towards developing neighborhoods. I remember people that live in the neighborhood, it's like Nelson Oaks or whatever the neighborhood is right behind there, were really upset when they put that in there. They thought, oh, we're going to have a bunch of homeless people come in here. And they didn't, because they've really monitored that neighborhood. They've really done the right things. But look, I mean, you have Adler out there talking about how they've raised, $500 million for the homeless.
I think that's one of their neighborhoods. Correct me if I'm wrong here, if anybody knows, but one of their neighborhoods, you actually have to work to live there.
Yeah, you do.
Right.
Yeah.
So like, yeah, which is, I'm like, that's great. That's great.
Yeah. No, and that's one of the things I love about that community. Because if you were to go, I tried to go a volunteer about a month and a half, 2 months ago. Kristina Smallhorn was in town, so we were going to go over there volunteer so we could shoot some film and stuff. And they're like, "No, we're like fully booked." So it was cool to see that so many people are still giving back to that community. Um, Anyway, so yeah, I didn't want to get too far into the whole voting thing. I'm not here to tell you who to vote for or what to do. I just sell real estate. So, but I think, Ian, what might be different this year is if you're looking at, the polls and things, a lot of people are upset with the inflation. They're upset with what's happening in local government. So maybe there's a big change. I don't know. Maybe you'll see some change. I mean, I personally think that it's going to be hard for Austin to change because their voter base is so far one directions. But if it changes, that'd be pretty interesting. I know out here in Dripping Springs, we have a $450 million bond for the school district out here on the ballot. And it's crazy to me that our area, Dripping Springs, sent $1 billion back to the state in taxes and reclamation, or whatever the Robin Hood thing. So we sent $1 billion back, and now we're having to raise more tax dollars on the people in Dripping Springs to pay for these bonds because we need a new high school. We need to fix up some of the schools. They're talking about education and bringing in some education things. So it's curious to me that's what happened. In fact, I think Austin just passed a bond recently that or maybe it's on the ballot now to raise more money for the schools. Yet you have, and then on top of that, you probably saw on the news that the schools saw the lowest test scores for fourth graders like ever in the last, month that came, or last week that came out, and who's directly impacted by that. I mean, it really is, a lot of these communities on the east side, a lot of these, minority specific communities are hurt by it most. And then, but, and this is part of why we left Austin, is that the school district, AISD, is going and focusing on things that's not necessarily school based. And then I'm not shocked when you see this happen where school test scores are so low.
That's a conversation I frequently have with clients. And when we're talking about test scores is a great example. It's like, listen, the last couple of years have been very strange for your kids, especially in so many ways. And so when you're thinking about that and you're looking at these test scores dropping, my response is, of course, of course they're dropping.
Yeah.
Like, look at what's going on and look at the social skills and all of these things that are affected by how we had to handle what we did. So anyway, let's keep going.
All right, cool. So let's talk about this. I want to get Christy Lou. Hi, Christy. Same thing here in Lakeway. We give millions of bond vote on the new school and upgrades. Yeah, I mean, I think that's tough. There's got to be a happy medium. I think there should be some help for those school districts that don't have the funds, but you drive through the middle of nowhere and you see these, school districts that don't have a ton of money, and then they have a $40 million football stadium. Like,
by football, do you mean soccer? Or are you talking about the
American football? Yeah.
Okay,
or soccer. You can play both on there. But it's interesting. Like, a lot of that money, those funds get spent on, sports and things like that versus education. Not that, however you want to look at that.
Brings in more revenue, man.
And I mean, it does, I guess, more.
Have you seen, like, Hutto has a really nice one. Pflugerville, they beautiful stadiums. I'm like, what in the world is happening here? That was a sticker shock for me when I first moved here back in 2015. I was like, okay, they care a lot, more than anything else, more than about anything else almost.
What's pretty cool is Dripping Springs, like their high school team this year is like really far up there. I don't know. They just played Lake Travis. I think they beat Lake Travis. So they're having a really good year. In fact, the quarterback's like, I don't know sports, like, people, but he's like one of the highest like rated recruits this year. So we'll see what happens there. But anyway, so let's talk about this. I want to get into this. So as we saw, prices have flattened out. I just showed you the stats there. Look at the sales though. This is what's pretty interesting. And this is what I'm going into, is the fact that based on what we're seeing here, we're going to go into 2023 and see negative numbers. In fact, we're already seeing in specific zip codes negative year-over-year numbers. So let's kind of dive into this a little bit, Ian. So these numbers just came out from our ABOR. We're at 2.7 months inventory in the Austin area. We only had 783 sales, which is down 31% over 2021. Now, let's be honest, or 2021, yeah. Let's be honest, 2021, we had a ton of sales because the interest rate was low. Now with the interest rate at 7%, it does make it a little more unaffordable for people. So you are seeing less sales. What's crazy about this is that the days on market jumped 18 days. What are you seeing with some of your listings right now? Are they sitting?
Absolutely that. And this actually speaks to Rowan's point that he mentioned earlier on. And he was asking about companies like Opendoor, Redfin, OfferPad holding a large a percentage of the market, 10% of the market. So yes, I think companies like that are attributing to that, and builders are all attributing to houses that are sitting on the market a little bit longer, because there were so many people that were so used to this easy selling market where they would price their homes here when really they should be priced here. And some of them are just staying stubborn and they're just keeping it. And then they'll drop $5,000. They'll drop $5,000. But really, they need to drop $50,000.
Yeah.
They need to hurry up. And these companies are just holding on to them. So I think it does affect our market. Another thing that was in there in that list was months of inventory. If you notice that it nearly doubled.
Yeah. So this is the Austin, which is the larger Austin area, which includes like Round Rock, Pflugerville, Kyle Butte.
And so for those who don't know, can you explain what that means, the months of inventory?
Yeah. So basically months of inventory is if you had to, let's say no other homes were to hit the market going forward, it would take 3.1 months for all of this to actually sell, everything on the market. Now we were looking at the beginning of the year and it was what, Ian? It was 0.7, 0.8.
Oh yeah, it was less than one.
Super low. And that was in MSA and also in Austin. So what's interesting, prices, if we look at these prices, right now, if we go on the market and look at the MLS right now on the MLS, we are looking at about 11,000 homes on the market right now. I'll pull it up just so you can see it. So 11,575 homes on the market. Let's think about this. A lot of these, a third of these are new constructions, like 3,600 of these homes are new construction. Had some of these homes been hitting the market last year, you wouldn't have seen prices do the crazy skyrocketing that they did. You wouldn't see these huge humps from here to here. It probably would have only gone up, maybe 10% from here to here instead of, what is this, 25%? That's a pretty big jump from 476 to 555. And then if we look at the Austin 550 to 667, like we probably would have seen a much lower number had we seen a lot of these listings in last year. But that was all partly and partially because of a supply chain issue and low interest rates.
Can I piggyback off of that?
Yeah.
I think another thing is we have a lot of people that are abandoning their contracts still.
100%.
And so I think that's affecting the numbers drastically because, builders are expecting to get this much. Someone backs out, they're going to sell it for a discount or at some sort of deal if they can to the next best buyer. And so those numbers, I think we're going to see, we've seen a bunch of people abandoning. We're going to see a few come back up at some point, at least related to those. I wish we could segregate it, but it's a little challenging.
Well, what's interesting about that too is I have a video coming out Tuesday talking about builders, so I don't want to give away too much, but I've actually seen a few builders that are offering like 4.9% interest rate, 3.99% interest rate, but but in order to do that, they're giving up like Taylor Morrison's a prime example. And I don't want to go too much because I want people to watch the video on Tuesday, but Taylor Morrison's offering 7% commission in some of their neighborhoods. I have a listing right now. It's a 55+ community. It's a great home, brand new, 2,300 square foot home. We have it listed at 550 right now. And it's a Taylor Morrison community in Vizcaya, and they're offering 7%. And then like in some cases, like $53,000 to buy down the rate.
It's so crazy. Listen, like, let's talk about this for just a second. Taking realtor hats off, right? It makes sense if you can get a deal like that and you have the need to purchase and the funds to put at least the 20% down, right? If you can do that right now, that's a low tax rate community, right? You're basically getting pick of the litter, and they're buying down your rate. And then if the rates drop, you can refinance later. Like, it's such a good opportunity for the people that are ready.
Well, and that goes back to my point here is that if you're looking at going from 550 to 667, right? And now prices are back down to 550, and you can get a buy down or a 2-1 buy down or something like that, and the interest rates, 5%. I don't know when we're going to see rates really at 5% in a while, right? I just don't think it's going to happen. I think it's going to be, I think, I still stand behind my thing that we might see rates at the end of the year down to 6%, possibly. I could be wrong on that. But if you can get, an interest rate around 5%, and interest rates are going to stay at this 7% or higher, some people are saying 9-10%. Like, how much further do you need prices to come down to buy that dream home, right? So look, I'm not telling you to go buy a home. I'm not telling you have to buy a home. Obviously, I'm a realtor, so you're going to say, oh, my commission depends on it. But if you're looking at it from an investment standpoint, if you're a buyer and you can get that low interest rate, payment makes sense, it's going to be a home you're going to live in for a while. I mean, it makes sense to still buy.
Let's address that you're a realtor, you should buy question. My commissions depend on it. It's actually, for a long time, it was easier to sell houses when the interest rates were lower because the prices were so much higher.
Yeah.
People were offering over, and we would make a percentage off of that. So it's like, you can't, that argument doesn't really hold up very well. I mean, I think if people need to buy homes, then we just want to be there for them. It doesn't really matter the price point. Obviously getting a, $1, $2, $3, $4, $5 million house is nice,
right.
But
so the thing I want to talk about here, though, and I think it's really important that we look at, is the fact that we are probably going to see price reductions. Well, not price reductions, but we're going to start seeing negative numbers. Like, so if we're looking at like this right here, where it's showing, 5% up, and I'm showing you on my chart here for the MSA that we're down to 470. If we continue to stay at this 470, or maybe even continue to drop any further, by November, we're going to see negative numbers. By December, we're going to see negative numbers. And then you go into next year, this big hump is gone, right? We're probably not going to see, a lot of people are saying there might be recession towards the beginning of the year. So if we see recession and this trend comes where people are saying, I can't afford these rates or whatever, they're making the rate the reason why they're not buying, like, you're going to see many months next year where prices, maybe, let's just say for shits and giggles here, 470, let's just say we stay flat for all of next year at 470. Well, you're going to see 1, 2, 3, 4, 5, 6, 7, 8 months of negative numbers next year, right? You're going to see negative X amount number.
So this is kind of based on what Dinosaur D's last question was. My question to everyone is, if you're watching this, drop in the comments, what do you think the prices should be at? The MSA sold price. What do you think it should be at based on you living here, living in other places, and looking at the market today? What do you think they should be at? Do you think we're in a good spot? Do you think it'll continue going lower? Do you think it should go lower?
Yeah, it's a good question. Well, here's something I think it's really interesting. So like I said earlier, most agents don't pay attention to the underlying data. I do. So let's look at this. So I started pulling through the MLS, so this is the data that comes out in conjunction with the MLS data, right? And so this goes through every single zip code. And I love to look at this. So what's interesting is 78749, which is Circle C area, has already seen a year-over-year decrease of 3.5%. Average is down 6.5%. If we look at 78748, hold on, 78748, we're break even pretty much, right? 485 is the median. If we're looking at 47, you're still up. So if you're an investor and you're looking at places to buy for rental properties, because we're going to talk about rents here in a second, because there's this article out right here saying that Austin now has more renters than homeowners, right? So if you're an investor, and remember last year, 35% of purchases were investment in Central Texas. So if you're looking at it as an investment standpoint, you're already negative on some of these. Look at some of these zip codes, 78745. So this is South Austin, down 4%, average is down 7%. If you're looking at, see, there's quite a few that were a little bit more. Keep going, Jeremy, keep going, 25% down, 7736. This is Barton Creek area. This is Southwest. 25% down median year over year and 42% down.
Based on these numbers, what I want you to pay attention to, and this is for everybody, and if you're looking at it, I know you're looking at it, but when you're looking at these, if you look at the residential single family existing, so resale homes versus new construction, it seems, just at a glance, it seems like the lower dips are the ones that don't include new construction homes, the neighborhoods that don't.
Right. And well, on here, it does show new construction.
Right. That's what I'm saying. So like this one only had 1 new construction and 19 resale, that last neighborhood you were just looking at.
Yeah. Well, let's see. Well, the thing is, like, most zip codes just don't have new construction in them anyway.
Exactly. That's exactly my point.
78744. Let's look at that. 4441. They have new construction. So 78741, which is on the east side, they're at 40% year over year. Their dollar volume's down though, 29%. And look, but if you're looking at the new home sales, again, up 26% still. Yep. And 78741 is right here for you to see visually. Right, it's over by kind of southeast Austin, right? Montopolis. There's some new construction in there. What about 78744? That's another going to look at. 44 is up 14%, and their new construction is up 30%. 44 is
that's definitely skewing the numbers. That's kind of my point here, right?
Right. Yeah, this is that southeast area. So, so there are already neighborhoods. So the point here is that there are already neighborhoods that are negative. So if you're looking as an investment standpoint, I would rather buy in a neighborhood where you've seen prices come down a little bit, maybe keep an eye on them, and then look at the rental rates in there. Now, I don't really love the rental rates in there in those areas, but if we're looking at this article that was out, I just said that rentals make up more than 50%. Austin Business Journal put out this recently, and they're saying all the zip codes where 15 zip codes now dominated by renters. 78741 and 44 are two that dominate like 50%. Right here, 78744. Zip code found itself the bottom quarter of the wealthiest zip codes, but it's one of the most rented. So another one that's was negative, and was the area, I forget the zip code, but it's the Hornsby Bend area.
By Del Valley, by Tesla. Yeah.
So it was this area right here. I forget what the zip code is. I think it was 21. So this whole zip code right here was down quite a bit as well. So if we're looking at this, there are zip codes that are already down.
That's very surprising. That particular area. It's surprising that area is so far down, right?
Well, let's be honest. How many clients did you have that said, "Hey, I want to go buy and be close to Tesla"? And they had a lot of new construction over there as well. DR Horton's over there building like crazy, Express Homes, bunch of them.
Yeah. Yeah, but I think some of those neighborhoods ended up getting kind of hit heavy with investors, and not even because there were the investor allotments of 10%. 10% of the neighborhood will give to investors, but then there were the sneaky ones that would go in and they would say, "Oh yeah, I'm gonna move in," and then all of a sudden, it's on the market the day after they close. It's like, okay, I know your life didn't change that much.
Yeah, what's interesting is I had a lot of people reaching out to me at the beginning of this year into like really May, where they were closing on their new construction home finally, and whether they had done it on purpose or not. I had several people reach out to me like, "Hey, I'm about to close on this property. I'm either not going to move in or whatever. And I want to list it." And if you look at the MLS, there's a lot of new construction homes on the market. I have one of them right now, the one in Vizcaya.
Yeah.
So there's quite a few that are brand new. So I mean, look, if you're a home buyer right now, or you're looking at it, and you can get a brand new home for almost what somebody just paid for it, it might be worth it. I don't know. What do you think?
Well, what gets challenging there is if it's in the same neighborhood and they're still building in that neighborhood, and the builder is like, "I'll buy you down to 5% or 4% interest rate," that's hard to compete with, even if it is a new home. So I think that is what causes a lot of people to end up renting it if they can swing it.
Well, I mean, let's continue to talk about renting though, because I mean, this article right here, 51.3% share are now renters in the Austin area. And here's something that concerns me about what's happening in the market, right? And it's not just because we sell homes, but if you think about a lot of people over the last, 2 years said, "Oh, I'm going to wait to buy. I'm going to wait to buy." There's a new world order or whatever it was called. What do they call that? Where pretty much everybody's just going to rent and be happy. Well, you have big conglomerations, and this is I talk about this a lot in my video on Tuesday. You have big conglomerations like BlackRock that are ready to swoop up and buy a lot of this inventory. Now, you have people that are out there that maybe could afford a home at 4.5% at these current prices, but 7% they can't, and so now they're going to continue to rent. So what happens is now we are forcing people to continue to rent and continue to be rentals. And if you think about where it starts, a lot of it has to start with our Fed doing all this rate increasing to trying to combat inflation.
Yeah, you say we're forcing. No. We've been trying to help people to get into houses so that they don't end up in this situation.
As an economy, the Great Reset. That's what I was looking for.
Yeah.
Thanks, DB.
Yeah, it's a little worrisome. Especially, so the people that had a savings or a nest egg and are able to take action now, great, good for them, right? And in the last few years, great, good for them. The big worry is the people that have lived here and have kind of taken it for granted that Austin is a cool, hip place and they can work at a coffee shop, but they want to buy a house. They should be able to buy a house. But I don't see the light at the end of the tunnel for people in that scenario, other than increasing your income, or moving further out.
Well, right? I mean, think about it though. Like we have so many jobs that are still moving here. With the market as crazy as it is, I don't blame people for coming and going, "You know what? I'm going to rent for 6 months, a year before deciding on what to do." And I think that's what a lot of people are doing. Is they're coming out, they don't know if they're going to come work for Tesla for 10 years or not, right? I mean, that's an uncertainty. Or they're going to come work, let's say they're coming to work for Micron, and Micron's not even moving here.
Micron.
That's another topic. It's another topic that we'll talk about here in a minute. But if you're one of those people, I don't blame you for wanting to come out here and rent. Now, the problem and I've said this several times on this channel, is the way that our tax structure works in Austin is that those people that are renting, are they voting for some of these things like the light rail? Are they voting for these tax increases on homeowners? Because it's not going to impact me, right? It doesn't impact me because I'm not a homeowner. I don't pay those property taxes. But once you go to buy a home, those property taxes that you voted for, now you're going to have to take on. And so then those renters then go, "You know what? I'm not going to live in Austin anymore. I'm out of here. This taxes, it's too unaffordable," and they leave while everybody else is holding the bag of taxes.
It's so rough. That's a chicken or egg scenario. Unless you've
Yeah.
gone through the process and you really understand how investing in real estate works, and then it's not, how would I say this? You have to think very deeply to come to a conclusion like that. And it's hard to think deeply about something that you're not very aware of, or you're not very educated on.
Yeah, this is a good comment here, I think, by Dennis Hardy. If you're priced out of homes, buy an apartment, build your equity, and then jump when you can afford it.
One of the smartest moves, I know a guy. So I remember when I moved here in 2015, one of my buddies, he had a house. He's a single guy. He worked 2 jobs, and he bought a house over by Hornsby Bend. And he rented he was a single guy, right? Rented every single room out to other people that were gone all the time, right? So he had a 5-bedroom house and rented out 4 rooms. And his mortgage was definitely more than paid for. Obviously, it's just the incredible scenario for a single guy back then. And that house has to have been paid off by now, right? I think you're going to see a lot of that coming back, whether it's your roommates are parents or friends or other family. I think we're going to start seeing a lot of that for people to be able to do this. And if you can do it and buy an apartment complex, imagine if you could buy a 4-unit, pool all your money together and buy a quadplex. That's great. That's a great opportunity.
Well, I mean, so I just pulled up duplex. Duplexes still aren't cheap though.
Duplexes aren't. That's why I said quadplex. You can get a quadplex for the same price as a duplex nowadays.
Let's see what a quadplex would run us. I had to put 200,000 as the base just because a lot of times they do lease price on there when you do cross property. But let's see, a quadplex still going to run you $1 million. I mean, I don't know that I'd want to buy this place for $1 million. I'd have to see and make sure the numbers. And that's the other thing too. One thing, not to give the crash people any credit, but there was one crash person that kept saying that the market's going to crash in Austin because rental prices haven't made up to purchase price. Well, purchase prices are coming down. That's not the reason why we're running into issues. We're running into issues because interest rates got so high and prices got too high. But if you're looking at something like this, for $1 million, you're going to have to rent this complete unit out for $6,000 or $7,000 for it to make sense. I mean, the taxes on this alone are.
Okay, hold on. Hold that thought though. You're going to have to rent it out for $6,000 or $7,000. Rent prices are where right now? Up. The majority of people are doing what right now? Renting,
yeah.
Right. And how long has this one been on the market?
This has been on the market 40 days.
40 days.
At 115, but the rents on this are only 4,800. I don't see the taxes on this though.
Well, and we don't know when the last rent was, right?
They're saying this is at a 5.22 cap rate. So South current. See, and I just said this is going to need 6,000.
Yep.
So 6,400. The one thing I don't see on here is the taxes. I'd be curious to see what the taxes are on this. But
I mean, it's probably 2.2 based on the area, right?
Yeah, taxes on this are 19,000 for the year.
Yeah.
So I doubt that's going to be a 5.22 cap rate. But but anyway, the whole point is like if you're going to buy a fourplex or a quadplex or something like that, I mean, you're going to have to put a lot of money down too, and you're paying a much higher interest rate. Because interest rate when you're buying as an investment are like what if we're at 7%, they're probably at like 8%, 7.65. I know one of my friends is buying an investment property right now at 7.65.
Yeah, and to make matters even worse, you can buy one of those with just the leases. You don't even you just need a stated income loan and a couple leases to show that you can afford it, and you're good to go.
Well, that's what's interesting is, I see a lot of agents talking about 2-1 buy down loans right now. If you go to Instagram or wherever, you see a lot of people talking about, my little doodle came to say hi to me. You have realtors that are talking about loan types. I don't think that they really understand very well on like Instagram. Oh, if you need to buy a home, just do a 2-1 buy down. It's so great because you're buying down the rate. I mean, I had a 2-run buy down when I lived in San Diego, and this is when the market had crashed. And I think it was like the first year was like
I was going to ask how
4%,
long.
and then 4.5%, and then 5%. So that's how they work. So the first year it's lower, then it goes up. So it's the same thing. I think you have to, if you're going to do like a 2-1 buy down, you got to immediately like just start saving the difference, right? So like let's say year one you're paying $3,000 a month, and year two you're gonna be paying $3,500 a month. I would already be paying, like, factor in the fact that I'm paying the $4,000 a month, and start just saving that extra now, because you're going to be paying it later. And I think that's where, wouldn't say we got in trouble with that, but once that rate finally hit the APR that it was supposed to be, it got tough. We rented out a room. We room hacked or whatever. And as new parents, that was not fun. But when we sold that house, we still made a lot of money on that house, and we only owned it for like 4 years. So,
well, so that's Griffin just put in a nice question or comment. So yeah, that is the idea.
Yeah.
The issue is we don't know where interest rates are going to be.
That's
right.
Yeah. I mean, let's say, yeah. So let's say you got 7%, and let's say the people are right. I mean, I haven't, my video on Tuesday, we talk about interest rates potentially being 5.4%. And in that video, I'm very adamant about, like, hey, don't take my word that it's going to be 5.4%. But let's say that they do go down to 5.4, and you can refine a 5.4. That is going to make a pretty big difference. The challenge is when you refi, though, you're still paying fees to the lender to do that refi. So you actually have to look and see if that makes sense. Like, a lot of people, when the big refi boom came, a lot of people were asking me, should I refi? Well, how much is the refi going to cost you? Oh, it's going to cost me $7,000, but I'm going to 2.5%. I'm like, okay, are you going to have the home for more than that 3 years? Because if you're going to refi that, it's going to take you 4 years to really see a savings, because you paid $7,000 or $8,000 for that refi. So it's the same thing here. You're buying and paying for a loan now. So you're paying closing costs on a loan, and then you're going to be paying those closing costs again in 24 months. So does that really make sense? And so that's why I think you need to just be prepared to pay 7% if you're going to be paying. That makes sense, Ian?
Oh yeah, man. I think it makes sense, but I'm a realtor. I think I had a lender pitch me the other day, and she goes, everybody who buys a house with me, I guarantee that I'll have a zero cost refi within, let's say, 3 years. I was like, huh. So this goes to, I think, Siva's point, always go for zero closing costs in those scenarios. I hear you. I hear, in theory, that would be wonderful to get everything for free, but that's not how the world turns, right?
Yeah.
But yeah, it is nice to try to go for that. So there are lenders that will guarantee that. So they might charge a little bit more now, but then guarantee that they'll refi later. So that's a pretty interesting tactic.
So the California wrote, heard of anyone who couldn't refi when they had a high interest rate? I'll give you an example. So our friend Brooks, who lives in the Bay Area. In fact, we should have Brooks on here. He's really, I want him to tell his story.
I love him. Yeah. He's awesome.
So Brooks, back in 2008, had bought a bunch of properties, and he negotiated with a builder on this property, that the builder paid 6 months of their mortgage. Well, the builder defaulted on that mortgage while he owned the property, and then he couldn't refi out of that just to save it. And so they foreclosed on the house that he was in. And then because he foreclosed on that, he couldn't refi on his other properties and lost all of his other properties. So that's why I tell people, like, if you're going to get a mortgage now, whatever you're doing, if you're buying down the rate or whatever, be sure that over a 10-year time frame, I would say 5-year time frame more, over a 5-year time frame, make sure that you can make those payments. Instead of
A, you can make those payments, or B, you have extra cash sitting there ready in case you have a surprise.
Right. 100%. Because the thing is, like, I think a lot of people got in trouble. Look, there's probably a lot of, back during, 06, 08, there was a lot of bad lenders out there doing bad things, offering bad loans to people. And then you had realtors back then, I don't know many realtors back then, but it probably parroted those same things like, buy the home or marry the home, date the rate, or you can just refi or whatever. Like, I'm cautious to tell people that.
It's just a simplified way of saying it, but you really are, you're buying the home, you're marrying the home. However, you can date the rate, and the rate might surprise you, might be a little crazy, right? Yeah. And then expect you to marry it anyway, or ask you to marry it. It's like, oh,
yeah. I mean, look, I just purchased our home in the height of the market. I paid, what my home would sell for now versus what I paid for it. I'm probably underwater on it, but that's not what I'm worried about. But we did like a 4.99% interest rate or something like that on this home. But we also like paid a ton down. So there are people that are still buying homes like this. The question then is like, if you're buying it, how much do prices come down over the next few months? And well, I'm hesitant to say they come down a lot. They may come down, but I don't know how much further they are going to come down, because you're just going to see less sales. Less sales are going to show those are probably going to keep prices at a certain level, because I think most people, when they go to sell, there's a bottom, right? Like, this is the bottom I'm going to sell my house for. Otherwise, I'm going to pull it off the market. Prime example, listing down the street for me, just pull their home on the market and have it up for lease.
Well, for most people, it's leaving the house with a profit, and it's enough to get their next place and still have a little extra in the bank. That's for most people.
Yeah.
When they're thinking about, well, what's my bottom line?
Yeah. Yeah. Steve had a good question here. Is it a good time to get your real estate license?
I wanted to answer that.
Yeah, I think it is, because right now you're going to see a lot of realtors. What was the article, Ian? Oh God, we had talked about this article. There was an article by The Real Deal that was talking about, I'll find it right now, but it was talking about the fact that there was only like 399 realtors that closed an Austin home or sold or on a sale of an Austin home, which was half of what it was the month before. So people are like, oh my God, only 399 agents in the Austin area. No, there's still like 20,000 agents.
Isn't that crazy?
But only 400 closed in Austin. If you look at the MSA, the larger area, there was like 3,000 closings. I mean, we have the numbers right here. There was almost 3,000 closings on market. That's not including off market stuff. So there's still 3,000 closings that happened. Now, it's not going to be 3,000 agents, because I know we closed in September. I think we closed 10 homes or something like that. So, but there are going to be a lot less agents in the market. We had Ryan Serhant come talk at Real One, One Real. And even he said, he's like, all those agents that were at the back of the line, a lot of these agents are going to leave, and you're going to be now at the front of the line. So is it a bad time to get your real estate license? No, as long as you can put in strategies to get business, maybe learn how to do off-market deals, maybe how to do not conventional sales, then yeah, I think you're going to be good. What do you think, Ian?
No, I love that, man. I had a closing yesterday. I had a closing last week. Every time I have a closing, I'm like, I'm grateful that I can think creatively. I think that's really important in this situation, especially. There are a lot of people that are going to go back. You're going to start, and tell me if you've noticed this, you're going to start getting random calls for people saying, hey, do you want to list your home with me? The market's going down, but I can sell it for more or whatever. Like, you'll get a lot of those types of calls, because that's just the strategy that has worked and has been tried and true a long, long time ago. I think it's a great opportunity to get in if you A, have a nest egg, B, have an engineering mind. I think that's kind of important, right? Where you can figure out what people actually need and give them that. That's going to be huge, because a lot of agents, they're just so used to kind of leaning on their friends and family.
A lot of agents got lazy over the last
and they got lazy, and they didn't have to think outside of the box. They didn't have to do anything really. And so those agents aren't going to be
let's
around.
talk about putting homes on the market right now. Listings are not selling as fast. You're having to wait a heck of a lot longer. You were just talking about when prices come down, agents make less money, right? Kristina Smallhorn, by the way, Kristina, you are in my Tuesday video, by the way, Kristina.
The GOAT.
I actually ripped off one of your videos and put you in it and gave you full credit. So you're going to be in there on Tuesday, Kristina. But yeah, I think you're right, man. I think it's going to come down to creativeness, right? There's still going to be a lot happening in the market, but there's going to be those people who just don't know how to put in the effort, right? They don't know how to pick up a phone and use it. I have my agents prospecting. They're calling every day. They're calling 3 hours. Siba, I just brought on a new agent, so I don't know that I'm going to bring on any agents. But reach out. You never know. Anyway, off topic there. So what do you think, Ian? So let's talk about this. As far as pricing goes over the next, in the Austin area, we can't speak for the market as a whole, right? But over the next few months, what do you see happening here in the Austin area? And it's so tough. It's so tough to look at.
It is. This is, yeah. I mean, it's all speculation. I feel like while some of these companies are holding and exiting, going back to Rowan's original point, I think that 10% is going to fluctuate our numbers a little bit. So I'm looking at maybe one more downtick, and we'll probably hit that cross and then start riding back up with it. Maybe not quite as aggressively.
Yeah. That's not what I wanted. I think what we're going to see towards the end of the year is more of what we saw this is 2020. Hold on, I want to show you.
Yeah, I think October is where we'll intersect, and then we'll start climbing back up, but not as aggressively in November and December.
I think we see in the Austin area this trend, which is 2019. I think we're going to see more of this 2019. I don't think we're going to see an uptick at all. I don't think. Now, I looked at prices for Austin for this month so far, and it looks like they've bounced up, but I don't want to commit to that because every time I've looked at my numbers and put out my numbers, the company that pulls the numbers pulls a smaller sample size than I do. So I can't tell you what they're going to do with that smaller sample size. But I would imagine it's either going to stay at 555. Maybe it comes up to 560. If not, I don't think it's going to be a huge decline. And it'll be a big decline in sales. Like the number of sales will probably be around 600, 650. Because right now they're about 560 or something like that from what I pulled. So maybe we'll see the same amount of sales we saw this month, right? What was 785 in the Austin area. So curious there. Kristina, I'm talking about who's going to benefit from all of these new home sale price drops. And I'm going to quote you in there. So you made a very good point. Kristina's video this week. That's what I was going to pull up in a second. Kristina's video this week, if you haven't seen it, I recommend watching. Very good video. So you're saying flatten out, and I'm saying flatten out.
Yeah, very, very, very marginal increase, but mostly flat.
Well, I mean, let's there's some things that are happening right now that are not necessarily the housing market, right? I mean, we are, like we were talking at the beginning, a week or 2 weeks away from an election. If we see I don't want to get political, but if we see a change in the House and the Senate, right? I think that you'll see a calming in the stock market, and that probably will do very well for interest rates if that does transpire.
I do agree with that, and I think more on a local level, once Twitter headquarters moves here, then that might affect more jobs too, and the demand for housing.
Yeah. Yeah. I mean, it's funny. I just put out a video that Elon's moving Twitter, and then he walked. Did you see the thing where he walked into Twitter with a sink, let it sink in? I thought it was dumb. It was kind of funny and dumb at the same time. Did you see that thing?
No, I didn't.
He walked into Twitter's headquarters holding a sink, like a sink you pulled out of the bathroom.
Yeah, that's the #1 Halloween costume this week. Watch.
Is it? Oh my
It's
God.
gotta be, man. It's gotta be.
Yeah. So Vincent Moreno, we just actually talked about this. The numbers in Austin's Colony are down. They're negative year over year.
That's the one over by Hornsby Bend in that area.
Yeah. I think so many people thought to buy over there and were buying over there because of Tesla. And I kept telling people, like, you should be buying in South Austin. Buy in the areas not close to that area. The problem with that area next to Tesla is there's not a lot of infrastructure over there right now. There's really not. And so
big problem.
That's a
same
big
with
problem.
Bastrop too, right? The roads, they need to widen the roads. As soon as there's even a hint of traffic, you are not going anywhere. And that's the problem. So if you're working remote, if you can find a good internet provider, then you're okay for a while. By the way, I just got denied Starlink. Did I tell you that?
How much does it cost to buy Starlink? Don't you have to buy like the thing?
Yeah, it's like
10 grand.
No. It's like $500, maybe 10 grand if you have to like create the node in the area or so. I don't know. I don't know how that works, but no, it was like $500 or $600 to buy the OG unit, and then it's less than $100 a month to be able to run it. But yeah, they said no, check back in the middle of March.
Huh?
I was like, what?
Well, they're sending all their things to Ukraine.
I know. That's
What do you think the chances are? I think the chances are very strong that Elon moves Twitter to Austin. I think they're very strong.
I'm going to go with 80+% that there is at least a heavier presence in Austin. Yeah. I don't know about moving the entire facility. I think that goes back to regulatory.
I think it makes sense to sell. Like, I don't know. Okay. I don't know if Twitter owns the building that they're in, but if Twitter owns the building that they're in, I'm selling that thing. I'm making my money on that, and I'm building over here.
I don't think it's the right time to do that for him, right? And if you look at something like Tesla, they're still putting more into infrastructure in California because they have such a large user base. You have to pander to the base of people that have already bought your product, right?
So everybody that's on Twitter lives in the Bay Area?
Well, I don't know if I'm saying that, but there's probably a good amount of people.
Yeah, for sure. Well, cool. Let's leave it there, Ian. I appreciate you coming from being sick. We were both out of it this week. I appreciate you coming back, man.
Little blue, man. Little blue, but it's all
good, we're
right?
Super blue today. Sorry about that. All right. We appreciate you. Make sure you comment, subscribe. We'll see you in the next video. Kristina, we'll see you later.
Bye, y'all.